loss with our first video of 2013. I've been off the air for a while due to internet problems, and hopefully that will be fixed soon. While I'm remembering, I hope you'll join me on Saturday, the 12th of January at 10 a.m. U.S. Central Time. I'll be giving a webcast then, and you can see the link below the invitation here on the screen, and I will also have the link on the next slide, which is a slide of the Euro FX. One day recently, with the beginning of a brief dollar rally in effect, there are certain things that was important to notice. First, when everyone is short a currency, the preponderance of trades left to buy are the shorts. They need to cover in order to take a profit. It seemed at that time dollar bulls were virtually everywhere to be found, and virtually no one wanted to hold dollars. That situation reflected in the daily charts of both the dollar index futures and also in the Forex daily charts of euro dollar. Euro had moved to over 1.34 euros to the dollar. The law of charts accurately reflected this situation. However, it was a foregone conclusion that at some point, in order to take profits, someone would have to begin buying dollars and selling euros in order to profit from both sides of the trade. When those dollar bears began to buy, they were joined by dollar bulls to the extent that buying pressure overcame selling pressure in the dollar. Now you can see that reflected on a 10-minute chart of the Euro FX. If the dollar is going up and the dollar index was making a 1, 2, 3 low, we see that the Euro FX was making a 1, 2, 3 high. And it would be identically the same thing in Forex on the euro dollar chart. When those bears began to buy, they were joined by dollar bulls, as I said, to the extent that buying pressure overcame selling pressure. We can see that reflected on the 10-minute chart in a classic law of charts, 1, 2, 3 high formation in the euro dollar and in the euro FX. The law of charts can only and does always reflect the truth about human emotional driven action and reaction to events that underlie the markets. There was a great opportunity to join the euro selling. The opportunity involved the trader's trick entry. We wanted to get in ahead of violation of the number 2 point of a 1, 2, 3 high. So we wanted to get in here where I'm pointing, one tick below this low. You'll notice that at that point, the momentum turned downward and the bar closed in the lower 2/3 of its range. And we wanted to sell one tick below that. And we did, and so we entered here, and you can see what happened after that. There were some Ross hooks, but we were already in the trade, and we didn't have to worry about those at all. Any failure by prices to continue in the direction of the move subsequent to a breakout of the number 2 point, once they broke out here, any failure to move lower, like here, created a hook. As soon as this failed to move lower, we had a hook. And again, it failed here to move lower, and that created another hook. Okay, and that was it. That was an easy trade. It followed the law of charts. We did what we were supposed to do. And it made a nice amount of money. And it made a lot of money depending how you managed it. I happen to be a scalper, and so I took my money rather quickly and got out and was done for the day. For those who stayed in, they made a really nice profit. And you can see then that the law of charts was fulfilled. I remind you again to join me Saturday on the 12th of January at 10 a.m. U.S. Central Time for a 1-hour webcast. It's going to be primarily about day trading, and it's going to be about how to use an indicator in a special way that's not done by most people. I have found very few traders who know how to do or are using what I'm going to show in that webcast. The link is takes you to Capital Trading Group. You see it here. I'll give you a chance to copy this down. tradingeducators.com/Capital Trading Group /CTG-webinar-series.html. And I hope to see you there. Until then, I wish you a wonderful day and a wonderful week.